won't stop till I hear him say,
Well,
so as soon as it hit $2,000, it was like, I'm tapping out, even though, from 1841.92, I could have wrote it all the way down to 1832.92.
you know what though, bro? Having discipline to take profit, even in the breakdown that I just made, it's a feature and a trait that not a lot of people have in this market. I just tweeted out, success in trading comes in the form of an ordered life combined with well-disciplined strategies.
Yeah.
And both of these things are attainable through organized thinking and carefully controlled habits, and taking profit from the market when the opportunity presents itself. Beautiful, bro. Beautiful.
Yeah.
Taking profit when the market provides the opportunity to you to do so is a trait, one within itself, that is a habit that most people don't have. They don't have the ability to take profit because they're greedy and they want more, which is why they never pass challenges, which is why they never make money, which is why they end up just staying in this loop of just despair, getting eaten alive by these markets time and time again.
Yeah.
So beautiful trades today on gold, bro. Again, we're at the top of our analysis, man. Just straight up smacking trades. Not only that, posting them in the chat and doing live calls. People are sleeping, bro. So you just got to stay disciplined, bro, and think of it too like this.
Yep.
Think of how long of a break you took, and your ability to trade the markets didn't disappear. So, that alone within itself should open the door for you to say, okay, Tuesday I'm up in profit. I can have one more trading day, and I only need 2 trading days per week to be successful in this market.
Yep. I mean, even right now, done for the week, 5K, in a day. So definitely done for the week. I'll look at it tomorrow, but not placing any trades.
Alrighty, what is going on, everybody? Welcome back to another CYPRX video breakdown. In today's video, I'm going to go into a deep technical analysis and fundamental dive as to how we were able to profit from selling gold this morning via some short scalp positions. So with that being said, if you all enjoy deep technical analysis dives like this, make sure that you all smash that thumbs up button, subscribe to the channel. Anybody that's interested in learning how we approach the markets here at CYPRX via our technical and psychological analysis, that mentorship link is in the description down below. You are more than welcome to reach out to me if you have any questions via our customer support email, which can also be found in the description below. To schedule a one-on-one Zoom call and meet me face-to-face, asking any questions that you may have before enrolling. So before we get into the technical analysis breakdown, just to give you guys some fundamentals and a fundamental buildup that led us to taking short positions on gold, I tweeted out to you guys yesterday, tomorrow and Wednesday will play an important role in the dollar's strength, so pay attention. We have the PMI coming out and the FOMC meeting in minutes. So today, Tuesday, February 21st, we had the PMI come out stronger, which obviously, of course, put sell pressure on gold, and I'm going to go over that in today's video. And then I tweeted out to you guys that DXY is above the historical level 103.800. For now, play it safe, react accordingly. All right. So utilizing fundamental analysis alongside technicals, we were able to have some very beautiful scalp positions on gold this morning. I want to take your attention to one of my most favorite fundamental analysis websites. They don't really put too much smoke and mirrors in their analysis, and I like to pay attention to the little tiny gems that they drop. I have highlighted here for you all. It says, should the scheduled US PMI appear firmer than in January and manage to cross the 50 mark, which it did, despite an unimpressive expectation, the odds of witnessing further US dollar strength and gold weakness can't be ruled out. So I utilized this fundamental in correlation with the fundamentals that actually released. We had the PMI come out and register at 50.2. So just to read this for you all real fast, as U.S. private sector gathers momentum amid softer contraction in demand, February data signaled a stabilization in U.S. private sector economy. According to the latest flash PMI data from S&P Global, business activity rose fractionally when compared with January. The upturn in the headline figure was driven by the service sector, and manufacturers continued to indicate a fall in production. The headline flash US PMI composite output index registered at 50.2 in February, up sharply from 46.8 in January. The latest reading was the highest for 8 months and signaled broadly unchanged output on the month across the private sector. So we utilized that fundamental alongside our technical analysis to catch these beautiful scalp positions on gold. And I'm going to go into detail as to how we were able to do this, how we were setting up our charts live this morning on Zoom call with the CYPRX students. Again, I believe we had like 8 participants on our Zoom call this morning, showing the students in the live market that we know what it is that we're talking about. I had given the students a little bit of a breakdown, telling them that we were going to first identify areas of interest where market makers could potentially be selling from, i.e., by identifying previous areas where banking institutions bought or sold from. And that once the news came out, if we saw a stronger data release by the US PMI, i.e. above 50, which you guys saw in this fundamental, we're going to be looking for sell positions on gold. And if it came below the expectation, which I believe the expectation was like 47.6 or something like that, then we were going to be looking for buy positions. Well, leading up, now remember, this fundamental dropped at 6:45 a.m. Time is the most important thing in the market. And if you pay attention to where we entered into the market, it was roughly at 6:45 a.m. on the dot when this news fundamental came out. So let's go into technical analysis. Before we entered into the market, I want to show you guys what the market makers were doing leading up to this price action. They were already pricing in a high PMI data release. You guys can see down here prior to New York session, they were manipulating early buyers during London. Okay, you guys can see potential trendline liquidity beneath lows in the form of retail money. New York session market makers, they liquidated any of those buy positions prior to New York session during the London session, and then they started to buy up price. Now, why were they buying up price? That's the question. Again, you want to be paying attention to where previous market makers bought or sold from. So if we go over to, let's just say the 10-minute charts, it's a little bit clearer for you all. We have some areas of interest marked off on the charts for you all. We have the London session highs, okay? And we have where the day's worth of price action started during Asia session, where major institutions were selling from highs or a premium. By identifying from the candlestick bodies up to the wick, we can see extending those over to the right-hand side where institutions were manipulating price back up into in order to sell high from during New York session, right? So understanding all this gave us a higher probability for a trade to go in our favor based off the ideology that we know that banking institutions are not going to short from lows. Well, if we're on the 10-minute chart and we're scalpers, and we can see that during the beginning of New York session opened at a low and they started to buy up price, and we knew that the fundamentals for the US PMI came out at 645. Interestingly enough, they were pushing price all the way up into areas where banking institutions, i.e. during Asia session, sold from, okay? And they were selling price at a high based off of where, again, previous institutions sold from exactly when the news fundamental came out, strong for the US economy, right? Now, also on the 10-minute chart, we noticed that we had a failure market structure swing high. That means that the market makers failed to break the previous market structure highs in the form of these 10-minute candlesticks over to the left-hand side. Once we saw that in the form of this candlestick fail to create a new swing high, have a candlestick body close above these candlesticks over to the left-hand side, we then drop down to the 1-minute time frame, giving us a higher probability to trade in tandem with the higher time frame if the higher time frame, i.e. because we're scalpers, we're looking at the 15 and 10-minute, is failing to create a higher high above the 1844 psychological level. Again, gold moves in the quarter theory, respecting the 00s, 25s, 50s, 75s, and 00s, because it's traded up against the United States dollar. If it's failing to create a higher high on the 10-minute and 15-minute chart above a previous area of interest, again, that we had highlighted, dragging from the candlestick bodies up to the wicks and extending that over from where previous banking institutions during Asia session were selling from at a premium, then that gives us a higher probability for a trade to go in our favor. So now with that being said, let's scale into the actual position. So right at 6:45 a.m. Pacific Standard Time here in California, you can see that prior to the news, the market makers were pricing in that there was going to be a high data release via the US PMI. They sell early. Remember, the banking institutions, they don't sell late. They get all this information way before retail investors. You can see them tap straight into the premium area where banking institutions, i.e. during Asia session, sold from, identified by this red area here. We failed to break a major psychological level, the 1844 psych level. We then dumped via bearish price action. So we have bears matching bulls. And then fractally, we have what right here in this general vicinity? Another failure swing high that fails to break market structure, fails to create a new higher high in the market. So what is this? You have to be able to identify this as the market's printing price action. This is a signal from the market makers that they have no interest in pushing price higher above the 1844 and instead are going to seek to grab liquidity from other areas of interest, i.e. beneath lows. If the market makers are signaling to you as a retail trader that they don't want to push price any higher by creating failure swing highs in the market, then they only have one other place to go to grab retail money that exists in the market, and that's beneath lows or stop losses beneath lows, right? So with that being said, we were able to identify that we had a failure swing high 1844. We created instead the definition of bearish order flow, which is a lower high formation instead of a higher high formation, which would be the definition of bullish order flow. So we put a sell stop beneath this bearish candlestick here with our stop loss firmly above the 1844 psychological level, looking for a sound 1 to 2.5 to 1 to 3 risk to reward ratio. All we were simply doing was looking for price action to come back down into an area of interest where market makers bought from. So down here at the 1834 psychological level is where we were targeting. We were targeting this level because if the market is going to flip bearish, this would be the significant higher low that the market would need to break in order to reverse all of this bullish price action. Why is that? Again, the thesis behind that is that this is the last area of interest where the market makers were buying from after they grabbed liquidity from a low and sent price action higher, creating bullish order flow. Right before they pushed price into the premium area where banking institutions sold from prior to this New York session during Asia session. So this is the area that we were targeting logically. However, because we secured about 2.5% on this trade, we moved our stops to break even, took profit from this trade. We came back. Stops got taken out here after moving them to break even and taking profit. The rest of the trade was unable to float because we got tapped out here after moving our stops to break even and securing profit from the market. But this was still a beautiful scalp position on gold, live in the market with the CYPRX students this morning during New York session. Now, remember here as well, this is exactly when the U.S. Services PMI came out, and it came out strong for the U.S. economy. It came out at 50.2. You remember from that fundamental that came out on FX Street, should the scheduled US PMI appear firmer in January and manage to cross the 50.0 mark, despite unimpressive expectations, the odds of witnessing further US dollar strength and gold weakness cannot be ruled out. So we had that in mind as soon as this fundamental dropped. At 6:45 a.m., it came out strong, which also solidified our bias to take short positions on gold. So we had fundamentals alongside higher time frame price action, i.e. the 15 and 10 minute price being pushed up into a premium, understanding that banking institutions like to sell from where previous banking institutions sold from, alongside seeing fractal price action fail to create higher swing highs in the market and instead creating lower lows, leading to fractal break-in structures, rejecting psychological levels, and giving us sound and solid risk to reward ratios to come and target areas of liquidity where banking institutions potentially left behind areas of retail investors in the market for them to come and profit from in the form of stop losses beneath lows. So with that being said, this was a phenomenal trade breakdown. Hope that you guys enjoyed this little tiny technical analysis. This is not even scratching the surface of how in-depth we go into breaking down price action for our CYPRX students, alongside with our psychological analysis. If anybody's interested in that mentorship program, the link is in the description down below. If you all want to learn in detail over 60 hours of course material as to how we break down and analyze the markets here at CYPRX. Blessings to you guys. As always, be cognizant. Make sure that you all are doing your own research. Be aware out there, be safe, and I will see you guys in the next video breakdown.
I won't stop till I hear him say